Have you ever wondered why some countries stay in debt instead of printing some more money? Well, this is mostly caused by inflation. How does inflation happen, you may ask? In today's video, we're going to talk about how inflation affects the country's economy, how it affects the amount of money in circulation, and also how it relates to the US economy. Inflation is an economic problem that occurs when there is too much money in circulation than products available in the market, and also when there is an increase in the price of goods and services. Prices rise and customers need more money to buy commodities to satisfy their basic needs. For example, if butter costs $1 and you have about $100 in your pocket, you may be able to purchase 100 butters. Then all of a sudden, the government gives everyone more money to spend. Due to the increased amount of money in circulation, the demand for a piece of butter increases, and this may lead to a price increase to maybe $4. Now, your $100 can get you only 25 butter instead of 100 pieces of butter. This is a perfect example of the economic law of demand and supply. To explain further, we are going to examine the old Weimar Republic. The Weimar Republic is a better example than the French, who raised their income taxes to provide money for the First World War. The Germans borrowed instead of paying off their debts after the war by demanding compensation onto the defeated territories. The mark, which is the German currency, fell from 4.2 to 7.9 per dollar because of this scheme. Their strategy backfired in a gruesome way, and they lost the war. This led them to have a debt of 112 billion marks, which is equivalent to $26.3 billion. What did they do after this? Although their income had not grown, they started creating more money to cover their debts, which created more problems concerning inflation in their country. As we said earlier, Germany's plan was to demand compensation from defeated territories after winning the war, but now these reparations were Germany's burden to bear. Without the economy to help, the Compensation Commission made a decision that they would stop accepting payment since the value of mark was decreasing. This made Germany purchase foreign currencies at the available rate, increasing marks' depreciation, which made the government spend more on purchasing foreign currencies to pay off its debts. The German mark at this time was 330 per dollar. Due to inflation getting worse, it led to hyperinflation. The value of the mark sunk to 400 mark per dollar, and this made the country unable to pay its debts again. However, despite all these losses, Germany had an advantage during the war. They were able to secure an industrial seat known as the Rural Valley. Because they were unable to pay compensation in money, the French and Belgian troops occupying the rural area insisted that Germans should pay their reparations in products instead of money. However, Germany did not agree to this. They reacted, telling their workers in those industries not to work for enemies, French and Belgians. The economy was very rough and people needed to get paid, so the workers did not agree to this. The government responded, promising workers financial support in terms of printing. Despite this, the price of goods and services increased. It got so bad that they stopped paying workers weekly or monthly. Prices kept increasing, so they had to minimize the way workers were being paid to keep up with the economy, and all of this happened because the money being printed did not correspond to the economic resources available in the market. From this, we can see that the problem does not lie with printing more money. The problem is printing more money than the available goods and services. That is why some countries that print more money to pay off their debt are creating more problems for themselves in the long run. Now let's relate to the United States of America. In March 2020, there was an unmatched demand for market liquidity, and there was also a massive sale of liquid assets, also known as US treasuries. The US treasuries are fixed income securities that are backed up by the federal government. It's like you giving the federal government a loan it has to repay over a certain period of time. The money used to buy treasuries is part of the money that the government uses to run the country and also finance debts. The effects of COVID-19 led many people to sell their treasuries to counter emergency bills, which was caused by the pandemic. This selling off was going to cause the price of treasuries to drop. So, the federal government created bank reserves and exchanged debt for treasuries. Their primary dealers were the big banks, and this was because the balance sheets of those banks were not capable of buying the market liquidity on time. The federal government came in as the primary buyer of these treasuries to prevent an increase in the interest rates and drop in the price of treasury bonds, as this could lead to more borrowing. This process is called quantitative easing. What is the essence of this federal government intervention? This intervention removed US treasuries to the bank's balance sheets, making room for banks to replace them with other assets. An example is consumer loans. The government believes that if they give loans to businesses, it would improve the economy and reduce inflation. The government didn't limit the buying of assets to treasuries alone. They also expanded the other assets that banks were willing to sell. Considering the huge liquidity in March, the federal government decided to buy assets according to their values before the crisis to save these banks from losing much. What the federal government is doing is printing money, not necessarily physical money. Now, you may ask how this affects a citizen of America. If you consider the federal government's main reason for printing money, which is to control interest rates and the price of treasury bonds, the American citizens are actually being saved from a situation where the dollar is depreciating. The federal government is still trying to avoid this, just as the whole world is trying to recover from the effect of the coronavirus in so many ways. Most importantly, with the way the economy of the world experienced a drawback. With the way the pandemic is not far from us, most countries would continue to use these policies in play to salvage national economies, including the United States of America. And this brings us down to our question. Can the United States continue printing money? Earlier, we highlighted an example on why it's a bad idea to print money without an increased income to back it up. So the question is the United States trying to create an economic depression by printing more money? Are they immune to inflation and hyperinflation? Is there a different tactic for the United States of America? To answer these questions, let's relate back to the story of the Weimar Republic. One of the reasons why Germany's economy dropped was because, despite printing more money, it was not used to paying back their debts. Rather, it was used to buying other currencies that devalued at a faster rate. The United States currency is a global reserve currency, and this means that most economic transactions done in the world are done at a value related to the dollar. This gives the United States of America an advantage over other countries, as they are able to fund themselves for a very long time. As the United States dollar remains a global reserve currency, with the induction of digital currencies gaining recognition and usage in the world, the global reserve currency may soon be a thing of the past. Countries like China are already planning on implementing a central bank digital currency policy, and if this policy gets to be implemented, the federal government needs to finance their debts. They can easily print digital currencies and pay for their debts. This is almost the same thing that the federal government is doing in the United States. There is one thing that may prevent the digital currency from replacing the United States dollar as the global reserve currency, and that is the policy has to be implemented across various economies of the world. So, can the US keep printing money? The answer is yes. But will it continue forever? Probably not. No one can predict when the US dollar would be replaced as the global reserve currency, but research has shown that day will come. Do you think the US currency can ever be replaced as the global reserve currency? Share your opinion in the comment section below, and if you loved watching this video, don't forget to give it a thumbs up.